Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Philippine inflation may continue to ease this month. We'll break down what's driving the trend and what it could mean for policymakers and consumers. The ICC case against former President Rodrigo Duterte takes a more personal turn as his ex-wife and mother of Vice President Sara Duterte, Elizabeth Zimmerman, arrives in The Hague amid growing political and diplomatic tensions. And 4 Filipinos are now missing in Myanmar following last week's massive earthquake, and the Philippine government prepares to deploy a humanitarian team there. All that and more coming up. First, let's take a look at how financial markets performed last Friday, with weak economic signals from the U.S. triggering a global market sell-off. Wall Street closed sharply lower, led by losses in tech giants like Amazon and Microsoft. Investor sentiment took a hit after U.S. data showed consumer spending rebounded less than expected, while core prices rose at their fastest pace in over a year. This on top of heightened trade tensions as the Trump administration ramps up tariffs, sparked by fears of a slowdown.
Stocks are down today largely because of the tariff situation that we have going on, and you combine that with a University of Michigan consumer confidence survey that came out that showed that, inflation expectations have risen both in the short term and in the long term. From a 1-year perspective, expectations are for inflation to be at 5%. And when we look out 5 years, the expectations are for inflation to be 4.1%. Now, that 5-year number is as high as it's been in 32 years. And so that has the market a bit spooked. Also, there are rumors out there that Europe is going to fight back and push back on the tariff talks by focusing on the U.S. service economy. So that means for our big mega cap tech companies, they are going to target them as part of the trade war.
There was a big sell-off in the 3 main gauges. The Dow Jones Industrial Average down by 1.7%, the S&P 500 lower by 2%, and the Nasdaq sharply lower, down by nearly 3%. Over in Europe, the UK's FTSE 100 slipped 0.1%. Germany's DAX fell by 1%, and France's CAC 40 lower by 1% as well. Here at home, Philippine inflation for the month of March may cool to its lowest level in 6 months, signaling that price pressures continue to ease, strengthening the case for looser monetary policy. A Business World poll of 18 analysts shows headline inflation likely slowed to 2% in March, down from 2.1% in February and 3.7% in the same month last year. If confirmed, this would mark the slowest inflation reading since September's 1.9%. Sun Life Investment Management and Trust economist Patrick Ella credits the slowdown to favorable weather conditions and to declining rice prices, key factors in keeping food inflation in check. The International Monetary Fund is urging ASEAN economies, including the Philippines, to accelerate structural reforms, warning that delays could undermine long-term growth and development goals. IMF economist Anne-Charlotte Honorato says that the region has the potential to boost output by as much as 3% over 4 years if countries move together and implement comprehensive reforms. She warns that achieving high-income status will require decisive and ambitious policy shifts. IMF research shows that the biggest gains come from executing multiple reforms simultaneously rather than phasing them in slowly underscoring the need for strategic coordination across the ASEAN. The national government's debt service bill drops to 106.51 billion pesos in January, marking a sharp year-on-year decline. Latest data from the Bureau of Treasury shows this is over 30% lower than the 158.9 billion pesos paid in the same month last year. Debt service refers to payments made on both domestic and foreign obligations. The drop comes as amortization on domestic debt plunges by 97.5%, falling to just 2.08 billion pesos in January from 84.68 billion pesos in the same month last year. The Energy Regulatory Commission, or the ERC, is fast-tracking the approval of power supply agreements for electric cooperatives, part of a broader push to stabilize power rates ahead of peak demand season. ERC chairperson and CEO Mona Lisa Di Balanta says that the move seeks to limit cooperatives' exposure to the wholesale electricity spot market, or WESM, as summer demand surges. She explains that this helps shield consumers from price spikes since rates under power supply agreements remain fixed, even if spot market prices jump. Di Balanta notes that most of these supply contracts are for electric cooperatives in the Visayas, a region vulnerable to price volatility and power supply constraints. A 45 peso per kilo price cap on imported rice takes effect today as the government steps up efforts to bring down persistently high food prices. Agriculture Secretary Francisco Tu Laurel Jr. is leading a market inspection in Quezon City to check retailers' compliance. He's joined by Trade Secretary Cristina Roque, local officials, and law enforcement. The move follows the implementation of Executive Order 62, which lowered tariffs on imported rice to 15% from 35%, but failed to push retail prices down. Laurel says that the price ceiling is designed to protect consumers while ensuring a steady supply in local markets. Heads up for motorists. Fuel prices are set to rise this week, adding to the cost of getting around. Gasoline prices are expected to increase by 85 centavos to 1 peso and 35 centavos per liter. Diesel may go up by 75 centavos to 1 peso and 25 centavos per liter. Kerosene is also seen to rise by 95 centavos to 1 peso and 10 centavos per liter. The Department of Energy says that the latest round of price hikes is driven by global developments, including U.S. sanctions on Iran and tariffs on Venezuelan oil, which are pushing up international prices. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how Asian bourses are faring this Monday morning. Now, following the sell-off in Wall Street overnight, the sharp sell-off in Wall Street last night, the Nikkei 225 is deeply in the red, well entrenched in the red. So early in the trading session, it's down by almost 4%, lower by 3.64%. Hong Kong's Hang Seng Index is not down by as much, down by 0.2%. Singapore's Straits Times Index down by 0.2%, and Shanghai's Composite bucking the downtrend in the region, slightly higher, up by just 0.1%. Now, here at home, the main gauge edged up by 0.1% last Friday to close at 61.47. Right now, let's take a look at where we are at. As of 10:14 this morning, the PSE index is higher by 0.5% to 61.18, just hanging on to the 6100 level. The broader all shares index in the red as well, lower by 0.7%. Taking a look at the sub-indices, we're seeing a mixed picture. The financials, industrial, property and services sectors are in the red, while the holding firms and mining and oil counters are limiting the market's decline. Now, at the foreign exchange market, the peso opened at 57.35 against the greenback. Now, this is stronger than its previous close of 57.38. On another front, while still related to the market, Philippine shares may come under pressure this week as persistent uncertainty over the Trump administration's trade policies continues to weigh on global investor sentiment. Research from PhilSox Financial shows the local market had a bearish run last week, with the PSE index falling below its 50-day exponential moving average. Technical signals also point to possible short-term downside as the moving average divergence line crossed below the signal line, indicating weakening momentum. The Philippine market remains vulnerable to external shocks, with investors keeping a close eye on global developments while awaiting domestic catalysts like the March inflation data and first quarter earnings results. Competition in the telecom sector continues to tighten with new partnerships and expansion moves weighing on investor sentiment. Last week, PLDT's shares ended lower at 1,288 pesos each, down 1.3% from the previous week, according to data from the Philippine Stock Exchange. First Resources Management and Security says that the decline came after Converge ICT announced a tie-up with Elon Musk's Starlink, seen as a game changer in the race for nationwide connectivity. Still, PLDT's push to widen its reach, including the distribution of 500,000 free SIM cards to remote areas through smart communications, helped temper concerns and signals its focus on user growth. Analysts say that the heightened competition could lead to better services and that Converge, but may also put pressure on revenues and margins across the industry. On another front, Toyota, owned by the Bilyonaryo T family, is shifting into high gear as it kicks off the 2025 season of its One Make Race series, promising a bigger, faster, and more thrilling motorsport experience with new categories to heat up the track. The details from our mobility correspondent, G. Baroga.
The heat can slow down racers and race fans as Toyota Gazoo Racing Philippine Cup kicks off its 2025 season here at the Clark International Speedway. With new categories, the competition is all set to deliver on its promise of an even bigger and better 2025.
Alongside its usual sprint and endurance races for novice, sporting, and super sporting classes, Toyota is rolling out new categories for the Toyota Gazoo Racing Philippine Cup. These fresh additions promise to turn up the heat and add even more excitement to the track.
For some of the changes that we made to this season of the TGR Philippine Cup include the addition of the Legacy class, and this brings back the owners of older Vios Cup cars in order to bring them back to the track and for them to re-experience what it's like to duke it out on the track. We also set a GR Club race for our GR Club owners. Although we already have track days and time attacks for them, we also want them to experience what it's like to be on the track as well, racing against one another.
Among the Legacy class participants is Senator Jamie Ejercito, who dusted off his old Vios during this long campaign break and got back on the track. Despite a short prep time, Ejercito ended up on the podium, and he's excited about the potential of the Philippine motorsports scene, especially with the rise of younger and more talented drivers.
We have a lot of good young drivers who are also excelling internationally. So this is one, motorsports is probably one area that we can explore. Kailangan na siguro ng support. Kasi hindi rin biro kasi medyo mahal din talaga ang ang especially tires, spare parts, gasoline, medyo mahal din. But I think there's a big potential for our young drivers. Maraming magagaling sa kanila, no? So talagang titong-tito na ang dating ko rito.
One of the young talents is Inigo Anton, who is back to defend not one, not two, but 3 championship titles. Overall champion, super sporting class champion, and a team championship for Avengers Racing. Despite a few bumps in the sprint races, Anton bounced back in the 90-minute endurance race, proving that in motorsports, teamwork is just as important as speed.
There's a lot of pressure that comes, with defending the title, but I know me and Team Avengers, we really have a strong pairing and we work very well. There's a lot of communication as well as drive and support through everyone. Through all the setbacks, no one gives up, no one falters. Everyone is there just to boost each other up.
But Toyota isn't just looking inward. Bilyonaryo heir Andy T hints at big plans to bring in other car brands to grow Philippine motorsports.
One of our objectives is to become a center hub for the motorsports within the Philippines. So as part of that objective, we welcome the opportunity to collaborate with other automobile companies, and Hashimoto-san specifically referred to Mazda, and we could look for others.
At TGL Philippines, we stay committed to our goal of growing an inclusive and exciting motorsports hub, where we can all come together and celebrate our love for cars and motorsports.
With 2 more legs coming up, fans can expect even bigger surprises, including Toyota's bold move to take the action off the track and onto the streets of Metro Manila. For BNC Mobility, G. Baroga.
The mother of Vice President Sara Duterte, Elizabeth Zimmerman, the ex-wife of former President Rodrigo Duterte, has arrived in The Hague, Netherlands, adding a personal dimension to the Philippines' growing ties to the International Criminal Court's proceedings. Zimmerman joined the vice president yesterday as developments continue to unfold in the ICC's investigation into the Duterte administration's controversial drug war. Access to the detention facility remains uncertain, but Vice President Sara previously said that her mother was determined to make the trip even without the assurance of a visit. The ongoing case continues to draw international attention with potential long-term implications for the country's foreign relations, investor confidence, and global perception of the rule of law. Now, human rights lawyer Cristina Conti pushes back against statements made by Vice President Sara Duterte following her dismissal of the International Criminal Court case against former President Rodrigo Duterte. Vice President Duterte earlier said that the ICC case would likely fail due to the alleged absence of specific names among the 30,000 reported drug war victims. But Conti argues that under international law, cases are not built solely on identification, but on widespread, systematic patterns of violence against civilians. She points to the conviction of Jean-Paul Akaya-Kesu in the Rwandan genocide, despite only 3 murders being directly linked to him. Conti says this underscores how courts consider broader context and consistent patterns, not just individual incidents. The ICC case remains a flashpoint for the Philippines on the global stage, with implications for the rule of law, governance, and international accountability. Now, a new list of alleged recipients of confidential funds from the Office of the Vice President surfaces, adding growing scrutiny over the transparency and accountability of public spending. House Deputy Minority Leader and La Union Representative Paulo Ortega identifies 5 individuals who supposedly received disbursements from the Office of the Vice President, including names like Beverly Claire Pompano and Miko Harina. But reports indicate that the Philippine Statistics Authority has no official records of these persons. Ortega calls for further investigation, raising concerns over the legitimacy of the transactions and the opaque nature of confidential fund usage. The latest revelations follow earlier claims involving other names, including Mary Grace Piatos, linked to similar payouts. The issue comes as the business community and public alike increasingly demand greater fiscal discipline, with transparency in government spending seen as crucial to maintaining investor confidence and good governance. 4 Filipinos, including a couple who lived in a collapsed residential building, are missing in Myanmar following Friday's 7.7 magnitude earthquake, raising concerns not only for humanitarian aid, but also for regional stability and business continuity. Foreign Affairs Undersecretary for Migrant Workers Affairs Eduardo de Vega confirms all 4 are professionals, either teachers or office workers. The Department of Foreign Affairs is working with local authorities to determine their whereabouts. Reports out of Myanmar say that the death toll has climbed to nearly 2,000, with over 3,000 injured. As rescue efforts continue, the quake underscores the vulnerability of Southeast Asian economies to natural disasters, a key concern for companies with regional operations and supply chains tied to Myanmar. The Philippine government is deploying troops, medical teams, and search and rescue personnel to Myanmar tomorrow in a show of regional solidarity following one of the strongest earthquakes to hit the country in decades. The Office of Civil Defense confirms that a 114-member team will be sent on April 1st, comprising soldiers, health workers, and rescue and retrieval experts. The contingent will be deployed for 2 weeks to help communities affected by the 7.7 magnitude quake. The massive earthquake, one of Myanmar's most powerful in the last century, has damaged airports, bridges, and highways, compounding an already fragile situation amid ongoing civil unrest. The deployment highlights Manila's commitment to disaster response in Southeast Asia at a time when regional cooperation is critical to maintaining stability, humanitarian aid flows, and supply chain access. And that's it for Business 360. I'm Maiki Oreta. Have a good week ahead and keep it here on BNC, the Bilyonaryo news channel.